All right, welcome back, my friends. We are still at it. We're going to continue on with exposing corruption on Wall Street and government, because knowledge is power. The only way that people are ever going to be able to protect themselves is by actually learning what's happening in order to be able to hedge themselves. Let me make sure everything's working okay here. Let's refresh the chat. Drop me another comment here in the chat. See if we can keep things going here. Cheers, my friends. I see you guys are joining. I'm not able to see your chat again, though. So apparently this is strike number 2. And I'm probably going to have to restart Streamlabs in order to get this to work. My apologies. Hopefully you'll stick with me for attempt number 3. You know what, though? Doesn't matter. I can actually see your posts here on my stream now. Melvin, is that a new chat, or is that from earlier? But yes, to answer your question, you will be able to invest in Lit Exchange from the UK. I believe we have multiple people that are currently investing from the UK and quite a lot from Europe. All right, Sean Alexander says it's working. Thanks, my friend. We are here. They do not want to be exposed. Hence, Andrew Left is now looking at 370 years in prison potentially for market manipulation and shorting GameStop amongst other stocks. Dr. Wurs, my friend, says, we'll make my contribution over the weekend. I totally understand. I appreciate your support if you can do it. If you cannot, again, that is also understandable. So thank you again. Yeah, let me get this popped up over here for you on the other screen. Yeah, it looks like Morgan Stanley just got done ripping off retail investors for quite a long friggin' time. I just tweeted this like at 2 in the morning, 3 in the morning. I got about 3 hours of sleep last night. I had to get up at 6:40 to get the girls ready for school. So if I look tired, it's because I am tired. I'm on 3 hours of sleep for the 3rd day in a row. Hence, that's what being a father is. That's what being a business owner is. And you guys know, ladies and gentlemen, know all about that, I'm sure. I know I'm not the only one. That doesn't make me special. Let's see. But here's the tweet. Morgan Stanley hid their fees on over 535,000 transactions. Each one of these 535,000 transactions was on behalf of retail investors, customers like you and I. Approximately oh yeah, you know what? The fine was $400,000. That's less than $1 per transaction. William says, I'll be watching no matter how many times you have to restart. Thank you, Bill. I appreciate you, my friend. You know what? If it's not releasing too much information, I don't think it is. Bill and I actually spoke probably for about 45 minutes yesterday over the phone. He has a fantastic business idea that he is in the middle of implementing. And Bill, I wish you the best, my friend. Talking one-on-one here. I really like your business idea. I wish you the best, and your business plan seems very sound and solid. I urge you to think about it deeply. Continue to do your due diligence, as I know you already have, because this has been in the works for years, and follow through and give it everything you've got, my friend. You know, you can always go back to working a 9-to-5 if you want to, or if you decide that it doesn't work out. But if you don't take the opportunity to invest in yourself, that is something that you will regret for the rest of your life. I can assure you that. The best decision I ever made in my life, second only to having children, is and has been creating my own businesses. That is true financial freedom, true freedom to grow and expand. And I urge everybody out there, if you're thinking about making the leap, jump into it. Do your homework, do your due diligence, make sure it makes sense, make sure you've got some financial runway, and do it. Too many people get stuck on the concept of, I'm creating the LLC, or I'm getting the business started, or whatever, or I'm, etc. If you've got the business plan all hashed out, if you've done your due diligence, all it takes is a few minutes, literally a few minutes, to go to your Secretary of State website and create your corporation, whether it be a C Corp, an LLC, etc. And another 5 minutes to go to the IRS website and create an EIN number, an employer's identification number, to link to that business. And you're off to the races. Cheers, Bill. So yeah, Morgan Stanley hid their fees on 535,000 transactions. Each single transaction involving hundreds, if not thousands, of orders, guys. And this didn't just happen for like a little while. From May 2018 through July 2022, Morgan Stanley provided written trade confirmation to non-institutional customers. That means retail investors, guys, like you and your parents, your grandparents, and your children. And they did not accurately disclose, or did not disclose at all, the firm's markups and markdowns for approximately 19,000 different municipal securities and corporate debt transactions. This is for approximately, in addition, they did not disclose the time of execution or specific URL, like a hyperlink with publicly available trading data, for approximately 35,000 fixed price primary market transactions involving municipal securities, and approximately 500,000 fixed price primary market transactions involving corporate or agency debt securities. So this here is over 535 transaction violations, 19,000 more non-disclosures or failure or improper disclosures on 19,000 more municipal security and corporate debt transactions on top of that, and their fine was $400,000, guys. That's literally why retail investors are fed up with Wall Street. That's literally why Lit Exchange has taken off, in my opinion, because people realize that they need a broker that works for them, that is by retail for retail. MOAS is inevitable, says Eddie Bravo. Hit the like, guys, says Vincent. Yes, please do hit the like. It's not for me. It's not for my ego. I can't even see it. It's for the YouTube and Twitter algorithms and Rumble and everywhere else you're watching, to share this with other people. Because literally commenting, chatting, reposting is the way that the word gets out there. Hey, Rachel. It's good to see you. Hi, Tammy. Tammy says, good luck with your endeavor, Bill. Beautiful. Beautiful. She says, wishing my fellow ape the best. That's what I like to see. That is what true retail investors do. We support each other. We lift each other up. We help each other move forward. Let me go back here to the other post on my profile, because that's what I really want to show you guys. This other one, yeah, that's a long time, right? 2018 to 2022. But get this other post that I'm about to show you, this firm did this for 25 years. 25 years. Watch this. Watch this. This is Pershing. Some of you guys may or may not have heard of Pershing, but they're another investment firm. Oh, yeah, let's talk about congressmen and senators as well. We got insider trading galore. Fucking John Fetterman was caught with 31 Stock Act violations. Take a look at this. Briefly while that loads. Check out this little number. Had an editor put this together quickly for us because I thought it was funny.
49, 89, 90. We saw 90 there for a second. It is 10 cents away. There it is. There it is. There it is. There it is. Look at that freaking boom boom candle, baby. Let's go.
Holy shit. Holy shit. Holy shit. What the f? Holy f. 221,000. Yeah, I'm going to sell a few shares. All right, guys. This should make $4.1 million. Yeah.
Let's go. Let's go. Let's go. Happy GME 30. Let's go.
They say that we continuously monitor the market and make changes when necessary. In light of recent volatility, we are restricting transactions for certain securities to positions closing only. That includes AMC, BlackBerry, Bed Bath & Beyond, Express, Gamestop, calls.
Some investors are calling it market manipulation.
We were allowed to sell, but we're not allowed to buy. It doesn't seem fair.
Oh, what in the world?
And now the mark. Oh! Oh! It went to zero!
This guy was
Shit!
Some users united again for an impromptu protest outside Robinhood's headquarters in Menlo Park. They report not being allowed to withdraw their money from the app.
Wrong way! Wrong way! No. That's it. Yes! No? What the f*** is going on now? No! Shut up!
Can I call Wolfie? He gets you hype. Yeah, I'm not sure. I'm not sure if he's available, but yeah, let's call Wolfie. That would be fucking awesome. Yeah, somebody mentioned just now the Japan carry trade. This is literally the Japanese government and institutions trading 20 trillion US dollars worth in our markets. And now, as you can see now, even as back in November of 2023, Deutsche Bank knew that this was going on. And it just started to collapse a couple weeks ago. And what's really weird is that people have already forgotten about it and are pretending like the market can only go up. Let's see. James says, longtime listener, first time comment. Love all your due diligence. Your team is awesome. I'm all in Lit Exchange. Hey, James Romero. Thanks so much, man. I really appreciate you. Thank you for your support and trust. It really means a lot to us. We will do everything possible to make you proud. That is for sure. I think my little one, my 3 older girls are at school, but my littlest is getting ready to go to the library with the wife, I believe. You going to the library, honey? That's awesome. Is mommy going to take you?
No, not the library. He's going to my music class.
Music class?
I'm going to
Oh, that's awesome. Have a great time.
Thank you. It's my music class.
It is your music class. That's wonderful.
And it's father student. My got my backpack.
You got your backpack?
What's he?
It's going to be so much fun. All right. Love you, hon. Have fun.
No, they love you. Love you, Daddy. I love you too.
That makes everything worthwhile. Everything. Oh, let's see. If you haven't checked out the Frisco Library, it's our favorite in DFW. Thanks. Yeah, we definitely will. We haven't been there yet, but I'll tell the wife, and maybe we'll check it out on the weekend. Khaled, that'd be awesome. Everybody said hi. They said hi, baby boss. Yeah, look at this. John Fetterman. Looks like Quiver Quant said, we just caught 31 Stock Act violations by Senator John Fetterman. This fucking chump. He disclosed trades that were made over a year ago by one of his children. Some of the trades were in companies that Fetterman oversees. We've caught multiple politicians violating the Stock Act within just the last month. Note that the trades may have been made by someone else in an account that is in the name of one of his children. If you have somebody else making trades on your behalf, that's probably something you should get notice of if you're a fucking senator or congressman, so you can actually abide by the law and follow the regulations. But of course, you guys hear the number one insider trader in the history of the world, the best trader in the history of financial markets, Nancy fucking Pelosi. Of course, it's easy to make exceptional trades when you're a congressperson discussing insider information with lobbyists, businesses, corporations, and other government officials. In my opinion, they shouldn't be allowed to trade at all. But if you're going to let them trade, force them to trade exchange-traded funds and products, force them to trade indices, and have an uncorruptible, unreachable third party to trade on their behalf, and have them provide written notice to that third party and submit a filing in order to sell. That would be the only way to actually cut out market corruption and still allow these scumbags to trade on financial markets if that's what they want to do. But again, you guys, we are on our way with Lit Exchange, currently at 116 founding investors. Let's see if that changed. We have 118 founding investors now. Cheers, my friends. Appreciate your support. That is straight fire. You guys are amazing. I was watching the other stream that was recorded alongside this one. Interesting. Thank you, guys. I see some of your comments up there. Let me just pull this chat box down a little bit. Blessings to you as well. God bless. I am very lucky. Excuse me. I'm very lucky, and I count my blessings every day, to be honest with you. I really do. You know, one thing that I want to know is what is the most important aspect to you guys about of a stock and broker, a crypto broker, right? Let me know, what is it that for you is very, very important, right? We've discussed this in the past, but I want to hear what you guys have to say that are in the chat right now, so I can make sure that as we develop Lit Exchange, we are implementing things that are important to you. We are using the tools that matter to you the most, and we are trying to address everything that you need to be addressed. So let me know what it is that, you know, obviously a nice user interface, right? That's huge. Doing everything we can to avoid payment for order flow from price distorting dark pools. Doing everything we can to route orders directly to lit markets. Those are a given. Those are the main plan for Lit Exchange as a business, of course. But what is it that you want out of a stockbroker or out of a crypto broker when you're using it on your computer, or you're using it on your phone or your tablet, and you want to make trades, or you want to learn, or you want to do due diligence on your investments? Trust, absolutely. Hey man, good to catch a live. Could you explain to me how the settlement and custody of this brokerage would work, please? I'm not entirely sure I understand what your question is. How the settlement and custody of this brokerage would work, please. I'm sorry, I don't exactly understand what you're trying to ask me. Could you please, you know, expound upon that a little bit more so I can answer it? Fetterman is a Mossad pawn. Literally has more respect for Israel than America. I can't say if that's factual or not, but I can say that it sure seems to be that way. It sure appears to be that way. let me get this other. Here's Pershing. Here's the other one I wanted to show you guys about. 25 fucking years of corruption. Oh, absolutely, it's going to be user-friendly. You know, Robinhood is awesome in the sense that it's very simple and minimalistic and user-friendly. And I love that. But it's everything else with Robinhood that's a problem for me. It's the payment for order flow through Citadel and Virtue. It's the Darkpools. It's the pulling the buy button. It's the outages. It's Vlad and everything that he has done so far to work against retail investors in times of exceptional volatility in which retail hasn't been able to make trades that they have to make. Or in the overnight session when they pull retail's ability to trade as well. Why even have an overnight session if it's going to go down once a week and people won't be able to buy or sell? Like, what's the fucking point of it? Not to mention, the overnight session is literally a dark pool. Your order's not hitting the national best bid and offer, and there's a high likelihood that you're getting a worse execution price than you should. So when you're buying, you're paying more than you should, and when you're selling, you're getting less than you should because of the fact that it's not going to the stock market. It's in a dark pool and overnight trading while the markets are closed. That's literally what overnight trading on Robinhood is. Let's see. Good morning to you, my friends, Eagle Eye, and everybody else. What does that say here? Movements, bank collapses, hedge fund collapses as a way to return the money to the U.S. Treasury under the veil of fines and manipulation. I cannot see all of your statements, but I do agree with that portion I can, that's for sure. Look, this just came out last week. Pershing has been fined for failing to report millions of fractional share trades to FINRA and the NASDAQ trade reporting facility. So the TRF did not receive millions and millions of fractional share trades from 1997 to 2023. For fuck's sake. Are you kidding me? 25 fucking years of failing to report these trades. And they were fined only $175,000. $175K. Tammy asks, is it true there is no halting in extended hour trading? That is correct, Tammy. In pre-market and in after hours, there are no halts. There are no limit up, limit down halts. Halts only occur while the market is open. That is why when you have seen stocks like AMC and Gamestop go up 1,000 or 2,000%, the majority of the move happens in the evening and in the early morning, because the limit up, limit down committee, which consists of firms like Citadel and Virtue, obviously, so they're the ones that make the decisions, they cannot halt the trades in pre-market or after hours trading. Manifests, before I get to you, says, Bio says, I want to work for Lit Exchange. Cheers, my friends. We're putting up job ads and everything right now as well. We have ads up now for developers. You know what? Maybe I'll pull that up right now for you guys to see. Yes, Manifest says that the overnight markets trading are constantly being stopped and not giving people the ability to buy or sell. Yeah, I don't even know why anybody even bothers to trade in those facilities, because the overnight trading session is literally 100% of those trades are going into the dark pool. You're getting worse buy prices, you're getting worse selling prices, and then the market opens in the morning, it's as if your trade didn't make a single fucking difference in the stock price because the market was closed. So it's not affecting the NBBO. And then they wrap everything up into one tiny little trade and pass it through the dark pool. Boss, your thoughts on LuxDove says except AMC was halted in the pre-market. LuxDove, I want to preface this with the halt for AMC in the pre-market was not a limit up, limit down halt. That was a halt on news because AMC was coming out with new information and news. So that is completely separate. That is more like I believe a FINRA halt of the stock for a 1 hour time period while the news gets disseminated to the markets, the people and stuff. So that is different from a limit up, limit down, 5% halt, etc. Sure, the brokerage you're opening, how does it differ from a normal DTC, IDTC settlement of the trade in custody? Meaning, how would you go around the 2014 CSDR? Thanks. Okay. Well, the number one fact is that instead of automatically routing orders through payment for order flow, via payment for order flow through Darkpools and wholesalers like Citadel and Virtue, our plan for Lit Exchange and our goal is to route as many orders as possible. I say this because we will still give retail the ability to check a box, for example, and route through a Darkpool if they want to. Route as many orders automatically through lit markets and lit exchanges like, for example, IEX, Investors Exchange. So this will automatically completely change the settlement process, as a dark pool will not be able to hold on to your order for 21 or 28 days as they currently can, because a dark pool can do that. The wholesaler, right, the market maker like Citadel or Virtue, can buy your order from Robinhood or Webull or IBKR or Charles Schwab, and then they can sit on it for up to 14 to 21 to 28 days. I believe 28 days is the maximum limit. They can take millions and millions of orders and squash them into a tiny, tiny, super dense ball, and then filter it through their dark pool and process what should be a very large and significant amount of actual change in the stock price into an infinitesimally small and fractionally small trade. The trade is massive in the number of orders that is going through it, but the fact that it goes through as one trade suppresses and distorts the actual price, therefore giving people an intangible change in the actual price of the equity. So the settlement is much more instantaneous and at least has to abide by the T+1 regulations when it goes through a lit exchange like IEX, for example, and that is not the case for dark pools, wholesalers, etc. So you're talking a possibility of nearly an entire month of difference in settlement, not to mention that because it's going to a lit market, your order actually makes an impact and allows for proper price discovery of the equity of which you're buying or selling. So I hope that helps. Now, also regarding DTC, my friend, this is the stock market. We cannot settle trades outside the DTC. Like, I can't go... Like ISDA contracts, for example, right? That's not even being settled. That's just a trade between two firms from one desk to another. Again, another huge form of manipulation, in my opinion. One that should be illegal, but it's not. But those are two completely separate things. Retail cannot trade ISDA contracts. We can trade equities. We can trade stocks and bonds and crypto and stuff like that. So routing stock orders through lit markets is key. James, that's a fact. He says, I have also seen AMC halt pre-market. That's correct, guys. Those are news halts. Vincent says, later, guys, got to go. Have a great one, Vincent. Great to talk to you, my friend. Yeah, I just spoke about Morgan Stanley and their measly measly fine there. Pershing as well, and they're measly ass fine. And it's reasons like that why retail is fed up with Wall Street, guys. I know you guys are fucking sick of it, and I am too. It's time for change. Our Founders Program so far has raised over $250,000 in just about 2 days now. And you can own Lit Exchange via Regulation CF, Regulation Crowdfunding, on a FINRA-approved funding portal called Silicon Prairie. I will actually drop the link for you guys over in the chat because I don't believe I've done that so far. I think I forgot to do that. But I'll do that for you guys. So far, cheers to all 118 founding investors who are now owners of Lit Exchange. Let me just go to the chat right now in YouTube Studio, and I will drop that for you guys. But yeah, drop it in the chat right now. Let me know what's the most important thing for you in that. We still have no way to go around that 2014 CSDR. Please elaborate on the CSDR, please, my friend. Right, but are you going to block those orders as well? It's impossible to do exact one-to-one exchange as of now. The custody would still be with the central banks, baby, the DTC, right? My friend, you cannot take custody out of the DTC's hands. That's not the way the stock market works. Bye, honey. Love you. Have a great day. Like, you can't just say, like, I'm going to take my shares and hold them here at my desk and be like, oh, okay, well, here's my shares. It doesn't work that way. It's just physically impossible. Nobody can do that. Not you, not me, not BlackRock, not Citadel, nobody. Nobody. You could DRS your shares, but DRSing your shares does not take custody away from the DTC anyway. They're still held on their books in one way or another. That's just the fact of the matter. That's stock market, my friend. I'm sorry. Freak says, I'll make a new account, boss. Password forgotten does not work. The account has to be made with Silicon Prairie. You can absolutely create a new account without a problem. The account is not through Lit Exchange. This is a FINRA-approved funding portal called Silicon Prairie, and we do not control it in any way. You just have to go on there, and you will be able to create an account, look at all the offering, look at all the terms, the perks, the business plan, the executive summary, you name it, it's all there. The Form C, the filings, the audit, the disclosures, it's all there. And you can please take a good look at it. There's a PPM, you know, the memorandum as well. That's 106 fucking pages of information and documentation. And it's all for you. It's for you to look through to decide if this is something that you think is a good investment or not. Get this thing, go to my channel here, and I can give you guys the link. I have to go through like a bunch of hoops to get to the chat right now simply because it's not showing up on Streamlabs. Check this out. You guys can see here, over here is where the chat's supposed to be here on the right. As you can see, it's over here, which is fine, but over here there's supposed to be a button that lets me open the chat, and then all your chats are supposed to be showing up here, but they're not, so I'm kind of just have to jump through hoops. Will Lit Exchange be available for Canadians? UFX, you can find that full information. I'm going to tell you, of course, right? But you can find that on the offering website here, and I will go down and read that to you briefly because that's not that's some pretty simple information that I'm fairly positive I can say without an issue. Oh, here it is. It's because it's about the company. We plan to launch in the USA first, then in Europe, Canada, and South America in stages as we achieve regulatory approvals. So it will take some time. It's not going to be an immediate thing. But everything in life that's worth doing is difficult, and that everything in life that's worth doing takes time. Here's the chat finally. I only got to push pause on it before my stupid voice plays twice. It's not going to be an immediate thing. There it is. Who's this dumbass? Morning, Jim. It's good to see you. Yeah, Yeah, Tempio says, that's my fear. You see, when the DTC holds them through this CSDR that are basically able to seize all customer assets, all of them, if insolvency of the firm could lead to a contagion effect. That's the markets, my friend. There's no broker in the world, and there never, in my opinion, there probably never will be, as long as the New York Stock Exchange or any exchange is open, in which the DTC will not be able to seize assets from the brokerage if insolvency threatens the firm. But in my opinion, you're incorrect in what you're saying here. They're not seizing the assets from the customer. They're seizing the customer's assets from the broker that is insolvent. If anything, that is helping people so that if your brokerage, say whatever, theoretical Robin Hood, let's call this fake brokerage, was going insolvent, the DTC would be able to seize the assets from them. So in my opinion, it's a good thing. That particular thing you're mentioning is a good thing. There's a lot of problems with the markets, but I don't think that's one of them. Britt Burden says, I'm just thinking of a few maliciously shorted stocks. Absolutely. I'm thinking of a few of those as well. Let me get this open over here. Pop this open on my other screen. Speaking of that, as you can see here in our business plan, on one of the many pages, at the bottom it says, in early 2021, Robinhood alienated their customer base by removing retail investors' ability to buy AMC and Gamestop, along with 11 other stocks, for several days, in a period in which those users stood to make incredible amounts of money. Yeah, if you're wondering why people hate Robinhood, that could be one of the many reasons. They literally took people's ability to make more money, to buy and sell in conjunction, and that is the worst thing that a stock brokerage could do. In my opinion, at that moment, the DTC should have seized all of Robinhood's assets, put them with another broker in a safe place, and shut them down. They should have been like Javier Milei from Argentina and be like, afuera, and shut them down. Get out of here with fucking Robin Hood. Good morning, Black Widow. It's good to see you, my friend. I'll close out this video on the other side here. Don't need that up anymore. There we go. That freed up a bunch of RAM. I do love this video still, though. This was a fun one. Seeing this one come together was cool. Let me grab my other tweet up while that video. I'll just let that video play while my other tweet.
49, 89, 90. We saw 90 there for a second. It is 10 cents away. There it is. There it is. There it is. There it is. Look at that fucking boom candle, baby. Let's go.
Holy shit. I hope you made a lot of money.
Holy shit. Holy shit. What the Holy 221.
This is from a video we did a while back. In which, all right, guys, this made $4.1 million. We were doing a simulation.
Let's go. Let's go. Let's go. Happy GME 30. Let's go.
They say that we continuously monitor the market and make changes when necessary. In light of recent volatility, we are restricting transactions.
Oh, look at this. Virtue and Citadel, Toronto Dominion
Certain
Bank,
securities to positions, closing only. That includes AMC, BlackBerry, Bed Bath & Beyond, Express, Gamestop, calls.
Some investors are calling it market manipulation.
We were allowed to sell, but we're not allowed to buy. It doesn't seem fair.
Oh, what in the world?
And now the mark. Oh!
Oh!
It went to zero! Yo!
Nobody knows these guys.
Some users united again for an impromptu protest outside Robinhood's headquarters in Menlo Park.
Let's see. When will ACATs be available? Let me get my face out of here for one moment. No, you don't. Nobody cares to see me anyway. Let me see. I want to make this chat box a little bit bigger right now. When will ACATS be available if that's able to be forecast yet? I'm not sure I'm not sure I can legally disclose that information right now because of the stipulations of the regulation CF are very stringent. So I think that would be more of a speculation into the future of the business, and I cannot legally do that. My apologies. It's just the law, and I will not get caught up like some of these other assholes. Britt Burden said, I was listening live to Trey when that happened. Still gives me chills and makes me smile. That is awesome. And yeah, actually, so was I. I was listening to Trey and watching him when that actual video occurred also. Dana, you're too funny. You're too funny. Look at this, guys. Mind and Emotion 7. You guys see this? What you're looking at here is a variety of market makers and firms like Jane Street, Susquehanna, Fidelity, Citadel, and Virtue. Notice the way that their assets are getting shifted from one to the next to the next. This is what we're talking about when we're talking about wash sales and wash trades and rehypothecations, guys. July 18th, Virtue Financial held a significant amount of securities here. Let me make this larger. There you go. I'll put it on the screen like that. Now you guys can see a little better. So this basically says the Virtue Financial reported portfolio on July 18th was very, very significant in the billion plus. And then July 19th, it looks like in the morning, Toronto Dominion Bank, TD Bank. Look at how high theirs went. And then July 21st, Susquehanna International Group. Their portfolio skyrocketed. The only one who doesn't really seem to fit, as he was saying, was Citadel's. And I believe he's right. Citadel's does not look the same as the others. Look at what happened here with Truist Financial Corp, though. July 23rd, then theirs jumped. And even still, though, July 21st and 23rd and 24th, Citadel's did jump as well. Pretty high. It came back down, jumped higher. Truist Financial jumped that one day in July 23rd or the morning of the 24th. Jane Street jumped on the morning of the 24th or during the day, it looks like. And then Fidelity jumped on the 23rd as well. SG Americas was significantly higher in the days prior and then dropped to nearly nothing. And then American International Group, AIG, let me scoot this back to the left. And I believe what we're seeing here are illegal rehypothecations and wash sales, which in part makes me want to submit a whistleblower request or a whistleblower information to the Securities Exchange Commission on this right now. And I think I'll do that. Memex, MEMX, yeah, the new community laundromat. That's right, Tammy. Memex is being created by a lot of these big firms in order for them to, allegedly, trade in Darkpools, right? Let's just leave it at that. I'll just use that word again. Allegedly. For legal purposes. Now, the Bank of Canada has been caught injecting $16 billion in overnight repos. This is quantitative easing to the max, guys. To the max. And this is happening every single day. And it's literally the maximum. The Bank of Canada can't inject a single penny more than the $16 billion that they're currently injecting into their overnight repo markets. That's wild, huh? Whoops. Let's scoop this shit over there. So yeah, what you're seeing right here, in my opinion, they had one day where it was 14.54 billion, but every other day has been 16 billion. Is the beginning of the end for a lot of these central banks. A significant portion of them. Virtue Financial, in case you guys missed it, is being sued by the Securities Exchange Commission. And Virtue filed a motion to dismiss. The judge literally replied that there is no case like this ever. There's never been a case like this. Cheers, AD. Have a great day at work, my friend. I'll see you later. You can obviously catch the recording of the stream later as well. That's why we keep them on the channel. You can see it on YouTube, X, Rumble, and several other platforms as well. Dana, have a fantastic day, everyone. I'm off to make a difference in the world. You better, girl. Go do your thing. So yeah, the judge literally said the defendant's Virtue allowed nearly unrestricted access to material non-public information, but misled customers. The SEC alleges that Virtue Financial, the market maker, allowed unrestricted access to their hedge fund, to retail investors' trades purchased using payment for order flow from brokerages like Robinhood, IBKR, Schwab, Webull, etc. And then the hedge fund, Virtue the hedge fund, took the free access that they had to the market maker's information that was actually your information. I'm talking highly detailed info, names, dates, order, amounts, equities, and everything, and allowed them to front run you. It's absolutely wild, guys. Bilbo, good morning, boss. Cheers, baby. It keeps rolling. Longest fight I've ever been in. Wouldn't enjoy it more with any other bunch. That's right. Neither would I. Oh, do I have the wrong one open? Yeah, I do. My bad. Scoot this over right here. Yeah, 16 billion in liquidity every day being pushed by the Bank of Canada here in overnight repos. I know it may not seem like a lot of money to you guys, but think about how much a million is. Imagine if you had $1 million. Now imagine if you had $1 million times 1,000. You had 1,000 millions. That's 1 billion. This is 16,000 millions. That's an astronomical amount of money. And that's why inflation is so high. People need to keep this in mind. Ah, yes. You know what? I have to go to the YouTube channel here. And I think I should have pinned that comment to the top. But I'm not sure if I'm actually able to without the desktop app working for Streamlabs. $7.1 trillion in uninsured deposits right now in U.S. bank accounts. Remember, your bank only insures you up to $250K through the FDIC. And this is a great point here. This is a very under-the-radar report from the FDIC, says FX Hedgers, and they're absolutely right. That's why we're trying to call attention to it, guys. The data here shows that there's over $7 trillion in banks right now that is not protected by FDIC in case of a bank insolvency and a closure. People forget that the only reason that Silicon Valley Bank was bailed out by the federal government was because I would say somewhere in the range of 90-95% of the people using Silicon Valley Bank were not actually just individuals. They were institutions. The government and the Fed continually bails out smart money with our fucking money. You and I and our children have to pay more in federal debt, in inflation, and it devalues our dollar. So by the devaluation of your dollar through inflation, you are literally paying to subsidize these billionaires and 100 millionaires and their companies because the federal government, the Federal Reserve bailed them out. The central banks bailed them out. And now we have to fucking pay for it. Does that sound righteous? Does that sound like they care about the middle class and Americans? Absolutely not. Look at this. Americans are holding a whopping $7.1 trillion in uninsured cash in their bank accounts, according to the FDIC. The agency says the data was captured at the end of March shows the amount of unprotected cash in U.S. banks is increasing for the first time since the fourth quarter of 2021. U.S. banks align with the FDIC to promise $250K, as I told you guys. Anything else is not insured. They're warning that uninsured deposits may make lenders more susceptible to bank runs, guys. They said while many banks increase their reliance on uninsured deposits, the trend has been most pronounced amongst the largest banks. Growing concentrations of uninsured deposits at large banks like JP Morgan, Citibank, Wells Fargo, Goldman Sachs, etc., make the banking system potentially more vulnerable to depositor runs, such as those in March of 2023. The FDIC's $250,000 cap was tested during last year's collapse of Silicon Valley Bank, Signature Bank, and First Republic Bank. In historic first, all deposits at the banks were protected by the federal government with a combination of the FDIC and an extraordinary use of the systemic risk exception, giving them the power to backstop everything. The Treasury Department, the Federal Reserve, and the FDIC literally printed money pretty much directly out of our bank accounts. It goes, they print the money, it puts into the billionaires' bank accounts. Then it comes out of our accounts every single time we have to buy or pay for anything. When you pay your mortgage, your rent, your cell phone bill, your utilities, your gas, your food for your family's table, or any little thing you can think of, a portion of that is literally going into those billionaires' pockets through the inflation that was caused by the printing of money to bail them out. And they didn't bail them out because Silicon Valley Bank was full of retail investors. They bailed them out because Silicon Valley Bank, the majority of them, 95% of them, are institutions and corporations that are owned by the world's richest people. Hence, massive, massive financial runs. What was that there that you asked? Someone sort of new who believes in you. How would we be able to invest in your little exchange? Let's see here. Sorry. Hey, Miguel, Chicago. Cheers, my friend. I'm from Chicago as well originally. Well, my friend, you can go to this website and you can look at all the due diligence, the business plan, the executive summary, the 100+ page documents on there that we have with the memorandum, and you can get all the information you need there from the SEC Edgar websites and the filings as well, and decide if it's a good investment for you. And at which point, all you have to do is pledge how much you want, basically type in how much you want to invest, and then fund the account, and that's it. You're a founding member. And we are offering equity in the company as well as a plethora of other perks and benefits. So let me go here to my channel, and I will pop a link into the description, into the live chat, because I cannot pin it to the top. Actually, I should be able to do it from in here. Let's see. I have to wait for it to populate, or to pop up at least. I'm going to mute this, though, so you guys don't have to listen to me twice, because I know I'm obnoxious. If playback does not begin, pause. Here, I'll pop it into the chat right here. It looks like I should be able to pin it right here. Why is Aflac insurance stock increasing in value? It has increased around $20 within the past month, asks Nancy. Nancy, I'm not sure exactly why Aflac is increasing, but if you were to ask me, it's probably because insurance rates have gone up ridiculously high over the last 2 years. Now, ask yourself, who is in power right now? And why is inflation so rampant? It is due to the federal government policies that are sending hundreds of billions of dollars overseas and to other countries to maintain their borders. Meanwhile, they are not maintaining our own borders. And they have actually unwound policies that were implemented by the prior administration that were doing a great job of bringing border crossings, illegal border crossings, down to actually like all-time low levels. So I have pinned it at the top, and Eagle Eye Production says is correct. He says if you start with $500 investment and then add to it, it's a cumulative investment. That's correct. So I can talk about that as one of the terms of the offering. If you like what you see in the offering for the, say, the $1,000 level, and you have $500 now, you want to invest $500 later, but you want to go for the Silverback offering instead of the Moonwalker offering, you're welcome to invest $500 now and then $500 later, at which point then you would fall under the $1,000 tier and the perks and benefits available there. As you can see here, they are cumulative. So, you know, 2 investments of $500 receives the $1,000 level of perks, and so on. You know, that goes for any offering level that you want. As you can see, the $25,000 level is the deep fucking value investor, and we do have several DFV investors in Lit Exchange already. Cheers to all of you guys, to all you, everybody from the Moonwalkers all the way on up. I truly appreciate you guys' trust and support. And we will do everything we can. What the hell? We will do everything we can to make sure that we represent you to the utmost positive way. All right, close that out as well. But yeah, again, we're looking at $20 trillion, guys, in the Japanese yen carry trade. $20 trillion fucking dollars. That's ridiculous. These derivatives are a huge part of what's wrong with the current financial system. There we go. Solid. I can see the chat again. Great. Yeah, Eagle Eye says you might start as a silverback but end up as the OG investor. That's right. That's absolutely right, my friend. I'm just pulling up some information here on the largest borrowers in the Fed repo loans. Looks like Nomura Securities has borrowed way more in the Federal Reserve repo loans than even JP Morgan, which is the second runner-up. Man, Nomura Securities, Japan is so fucked, and sadly, we're going to get dragged down with them because they can't pull $20 trillion out of the U.S. stock markets, or even a fraction of that, without negatively impacting the U.S. stock markets, guys. This is a big deal. This is a big deal. Look at this. Largest borrowers in Fed repo loans from October 1st, 2019 through December 31st, 2019. Now, this is important because the repo operations crashed in September. I believe it was September 19th of 2019. That's correct. And the Federal Reserve had take over the entire repo operations because the repo rate, interest rate, skyrocketed because no bank was lending money out. So basically, in the following 2 months, or well, let's see, 3 months here after that, you had Nomura Securities from Japan borrowing $3.7 trillion. Trillion dollars, guys. Remember, 1,000 millions is 1 billion. And 1,000 billions is 1 trillion. Think about how astronomical this number is. Then JP Morgan also borrowed 2.6 trillion, Goldman Sachs 1.7, Barclays 1.5, Citigroup 1.4, Deutsche Bank, DBS, 1.4. All in a 3-month period, and we're just talking 5 banks, not even including the 1,200 other banks in the U.S. system and their holding companies, or the other, non-U.S. banks as well. And the problem with analyzing the unwinding of the yen carry trade associated with $20 trillion in the Japanese yen being invested here in the United States financial markets is that it is a destructive cycle of selling, a fire sale of securities in order for them to meet margin calls. And there's a huge number of ways that large traders could be losing money in an equally massive arena of related exposures. And things that are exposed to that are also you and your parents and your children's 401ks and pensions and thrift savings plans and all this other shit. They're all intertwined and intermingled. Even if you've never even touched a stock from Japan, for example, even if you don't manage your 401k, even if it doesn't fucking matter. They're all connected. There's massive related currency losses, derivative losses, stock portfolio losses, shaky counterparties, brokerages, hedge funds, family offices, clearinghouses, the DTC, the NSCC, and they're all linked and they're all at risk with these ridiculous amounts of derivatives. So I'll get the OCC, the Office of the Comptroller of the Currency report out for you guys briefly. And I will show you guys. Tommy says, yep, that last one was me. Cheers, my friends. I appreciate you. Welcome to Lit Exchange, Tommy. I appreciate your trust. Why is Clover Health climbing up over $2? Clover, in case you guys didn't know, has been a meme stock for a significant period of time. So it may be due to some company-related information that is forcing shorts to cover, not close, but to cover some of their positions. Samony says Clove is up again like back in 2021. Samony, morning, guys. Bad News Ape and VA checking in. Cheers, my friend from Virginia. We should pull that up right now. I can pull it up on one of my brokerages. I could pull it up on Webull, for example. I say one of my because I am well diversified across brokerages because I don't trust a single fucking one of them. Get rid of some of these tabs as well. Don't need all these open right now. Look at these charge-offs. 2008 and 2010 through the roof. That hasn't yet materialized with credit card and bank charge-offs. But because that always happens after the crash, after the recession. You guys remember the September of 2018 market crash? That happened in 2009 and 2010 and 11 when these massive amounts of charge-offs started to spike. You guys remember the dot-com bubble crash in 2000? Well, those charge-offs didn't happen until 2002. Same thing's going to happen this time. The charge-offs will actually occur several months and years after the recession. Not before. Not before. It doesn't work that way. Let's see, I don't want to miss your chat. Let me see. Yeah, do me a favor, guys. Slap that like button if you haven't already. Hit a repost if you don't mind. Let's see. Big Red Bulldog says KISS should be next, then AMC GME to follow like usual. I would be ecstatic to see that, my man. I would be ecstatic to see that. We all know that they are oftentimes pushing along one meme stock to the next because they can't handle all of them at the same time. Costs. That's what I was thinking. I'm like, what is KISS, man? Like, yeah, costs. Makes a lot of sense. Look at here. Let's see what's up right now. Looks like Crown Electric, which has been extremely volatile over the last several months, a meme stock, if you will, is also up 5.58%. UBS Group 5.4%. ARM Holdings 3.2%. Short ARC, so shorting the ARC Investments ETF is up almost 3%. Chewy, of course, Ryan Cohen's former company, Chewy, is up 2.98%, which you guys all know. DFV now owns quite a lot of Chewy. Charles Schwab and Robinhood are in the green at the moment. NYCB, which is owned by hedge funds, is up 2% as well. Tupperware brand, another meme stock, is up 1.69%. Nvidia, PayPal, 20 plus TLT is up right now, 0.74%. Lockheed Martin, for obvious reasons, because of the ridiculous number of wars that are currently going on and being aided by the U.S. government with our tax dollars. And then the money is being spent on their buddies' companies like Lockheed Martin, in which they're all enriching themselves, and it's causing us all more inflation, in which we have to pay more every fucking day. Deutsche Bank, Salesforce, UltraPro, the S&P 500. Looks like it tanked quite a little bit there. It is pulling back up to the upside. It's currently sitting at 542 on the SPY. And it looks like it will try to retest new all-time highs again in the next coming days. Let's see if that happens. Let's see if they succeed. I wouldn't be surprised to see it try and fail. But obviously no guarantees, right? Again, check this out. Derivatives, toxic derivatives, have increased in the first quarter of 2024 by $13.6 trillion. That's a 7.1% increase in one fucking quarter. $13.6 trillion in derivative notional amounts in 2024. Insured U.S. banks and saving associations, their holding companies, reported trading revenue that is $2 billion less than a year earlier, which is 11.1% reduction in trading revenue. Credit exposure from these derivatives increased 4.6% to $251 billion. So their revenues are down. Their exposure to these derivatives is up 4.6%, $11 billion. And the derivative notional amounts is up 7.1%, which is $13.6 trillion fucking dollars, guys. And you can see it here in the chart. The total trading revenue is down 11%. Their holding company trading revenue is down 15%. Their exposure to each other is down 3%, and their exposure to their counterparties in the other businesses is down 2.7%, which is marginal. Net current credit exposure, the netting benefit, the benefit that they receive from bilateral netting is down. That's also bad for them, in case you didn't know what that meant. And their ratio of fair value collateral to net current credit ratio is at highs I have not seen in a decade. If you look at these numbers here, the fair value collateral to net current credit exposure right now is at 127%. Let me zoom in just a little bit. So basically they're saying collateral held against hedge fund exposures increased in the first quarter to 891%. Jesus. Think about what I just said and what that means. The collateral held against hedge fund short positions and derivatives exposure increased in the first quarter of this year to 891.9%. That's a ridiculous amount of collateral that is required. Reporting banks held collateral valued at 127.8% of their total NCCE at the end of the first quarter, up from 118% in the quarter. So this, again, is the fair value ratio of their collateral to their net current credit exposure. It is higher now at 127.8% than it has been in over a decade. Their fair value corporate and all other counterparties is higher now than it has been in a decade. Their fair value to sovereign governments is higher than it has been in a decade. The fair value of the collateral to net current credit exposure is almost double to what it has been, and more than double to what it has been in the past decade. They shouldn't be fined money. They should have their license suspended 1 second per violation. Riley, one of the only institutions to give AMC a higher price and positive reviews. Absolutely. Well, it is what it is, my friend. But these risk here is ridiculous. As a matter of fact, I think we should even tweet this out, because more people need to see that this shit's happening. So let's go ahead and do that. I'm going to tweet that out now. If you guys have any comment, by all means, or any questions, drop them down. But this is astronomical. This is unsustainable. Period. Bank exposures to hedge funds are secured because banks take initial margin on transactions with them, in addition to fully securing any credit exposure. Collateral coverage of corporate and sovereign exposure is much less than coverage of financial institutions and hedge funds, because they're fucked. A more risk-sensitive measure of credit exposure would consider the value of collateral held against counterparty measures. Yeah, that's bad. We should definitely highlight that as well. People are going to want to see that. Samony says, I still have a position in Megal just in case. Good luck to you, my friend. I wish you the best with it. That's for sure. But yeah, here we're going. We have 118 founding investors on Lit Exchange so far. Feel free to do your due diligence. Check out all the disclosures, the SEC Edgar filings, the form of subscription agreement, the independent auditor's report, the business plan, the pitch deck, the offerings, and everything else associated there. I think you guys will be pleasantly surprised with what you see. But this is definitely something that I think is worthy of tweeting. So let's do that. Because this is a big deal. Collateral against hedge fund exposure to short positions and toxic derivatives has increased to 891.9%. The collateral fair value to net current credit exposure ratio is higher than levels seen in over a decade since the GFC. Margin calls imminent, folks. And you know what? I'm going to tag my two favorite meme stocks. I could tag all of them, and the precious metals and everything. But I'm just going to tag these two for now. They need more margin than ever. They need more margin than ever. I'd be willing to bet that it's probably the highest it's ever been of all time. I'm going to delete some of this to shorten up the post just a little bit. There we go. That way it all fits without having to, people don't have to open it to see it. That helps a lot. Sweet. All right, we're out there. So yeah, again, guys, collateral against hedge fund exposure to short positions in toxic derivatives has increased to 891%. The collateral value to credit exposure ratio is higher than levels seen since the GFC. Hedgies need more margin than ever. They are so fucked. Don't mind if I do. Margin calls imminent. We're going to be so fucking rich. Woo! Now, keep in mind, I'm not a financial advisor. It's not financial advice. Do your own fucking due diligence. Black Widow says, everything is so ridiculous. They have no way out of this deep money pit. It's just unbelievable and undeniable. You couldn't be more right. Holy shit. It's wild. Wild. Look at these. And people were like, oh, was that 118% last year, 96% in 22, 108 in 21, 87% in 2020, 114, 113, 111, 98% below that. The credit exposure compared to the collateral is immense. Hedgies are fucked. So yeah, anyways, guys, if you're not at work right now listening to this, which it's cool if you are, but if you're not at work and you're able to actually comment or chat, let me know what you guys would like to see out of a stock brokerage firm. Let me know what you'd like to see out of a crypto brokerage firm. And that way I can make sure that I talk to our team and consider implementing that as in the future here for Lit Exchange. Let's look at the level 3 trading assets whose fair value cannot be determined by using observable inputs. Major dealers have reduced the volume of level 3 trading assets because the model inputs that determine the fair value are not derived from observable market transactions. Look at the quarterly compression activity in trillions of dollars is now $289 trillion. This is volumes of cleared and uncleared derivatives, as well as risk weights for counterparties in each of these categories. Higher than ever. Now, I want you guys to see something very much. Centrally cleared derivative contracts as a percentage of total. This means on lit exchanges, not dark pools, lit exchanges. How much occurs on lit exchanges? Only 35%, 36%, let's say. Let's keep rounding like I have been. Only 36% of all transactions in derivatives occurs on lit markets. That's another one I got to tweet. Look at where we were in 2021. It was 39 to 43%, 37 to 40%, 41, and now only slightly higher than what it was in last quarter. It's at 35.9%. The lowest. The last 2 quarters have been the lowest we've seen in the last 5 years. Why do you think that is? I mean, you know why, right? I mean, that's a rhetorical question. You fucking know why. Unbelievable, this shit. You know what? I think I should preface this with, I should type. Centrally cleared equals lit markets. Not centrally cleared equals dark pools. Change the color of it as well so people can see that it's not part of the original document. I don't want to misrepresent anything, make people think that I'm, that it's part of the original document, because it's obviously not. Let's underline it. Maybe it won't let me. That's fine. Let's leave it like that. It's obviously not part of the document. Put it right there. So this is what's really wrong with our markets, is when so much of this information is being suppressed and routed through dark pools. Proper price discovery in equities just is impossible. It's impossible. The main difference is we would be paying for order flow, correct? How much is that per trade typically? Sorry if that's a silly question, but I have a personal exchange. Nat, don't worry, that's not a silly question. You're paying for order flow right now, and you just don't know how much you're paying. And I can't tell you how much that is, but let's put it this way. Paying for commission-free trades literally cost so much that the SEC charged Robinhood with deceiving customers about how Robinhood makes money and failing to deliver the best execution trades. Robinhood agreed to pay a $65 million civil penalty, of course, without admitting or denying the SEC's findings, and you guys, us, retail, got nothing out of it. They didn't give us a damn fucking thing of it. And here, let's see what they had to say. Oh, shit, where did I go? The SEC said one of Robinhood's selling points to customers was that trading was commission-free, but due in large part due to unusually high PFOF, payment for order flow rates. Robinhood customers were executed at prices that were inferior to other brokers' prices. The SEC order found that Robinhood provided inferior trade prices that cost customers $34 million more. These commission-free trades cost you $34 million more than if you would have just paid a commission. So if you would have paid a commission for your trades, you and everybody else on Robinhood would have paid a commission, you would have saved $34.1 million. But because people want commission-free trades, right? Commission-free, I use air quotes because it's not fucking commission-free. You literally paid a commission that you couldn't see, and then you paid $34.1 million more in additional commissions, again, that you couldn't see. So in my opinion, it would be better to pay a few cents or a few dollars, a few cents if it's a small trade, or a few dollars if it's a big trade, or whatever, fractions of a penny even if it's a tiny trade, in commission, and get the best execution than to lose $34.1 fucking million in hidden fees through payment for order flow to Robinhood. So again, the director of the SEC's enforcement division said Robinhood provided misleading information to customers about the true costs of trading with the firm. Market makers such as Citadel and Virtue pay e-brokers like Robinhood for the right to execute customers' trade. The broker is then paid for the shares that are routed, which can add up to millions when customers trade actively as they have this year. So as you guys can see, that is why we are creating Lit Exchange, the world's first fintech company developing a stock and crypto brokerage for retail investors by retail investors in order to trade your stocks on a lit market, and you pay commission instead of payment for order flow because, as I just showed you, as we just proved to you, people lose more money with commission-free trades than if they were to just pay a fraction of a penny or a few pennies or a few dollars on a trade up front. And then you at least know what the fuck you're paying, and you know what the hell you're getting. And you know that your trade's hitting the lit markets and paying for, and you're actually making a difference in the stock price instead of it getting routed through a wholesaler, through a dark pool, through a PFOF, and making an intangible difference in the fucking stock price as if it had never even occurred. Look, 35% of trades are going through lit markets. 35%. The other 65% are going to dark pools, guys. That's fucking insane. And this is for derivative contracts for banks, of course. There are also different numbers there for stock and equity trades to retail investors, but that is also in the 60% range, 63% range dark pools for retail investors as well. Wait, let's go way down here. I'm going to put that tweet out as well here briefly. But check this shit out. The derivative contracts by product. Look at the way that the derivative contracts started to trend upward in 04 through 08. You know, they were 70 trillion, 90 trillion, 125 trillion, 165 trillion, all the way up to their, around 210 trillion in 08. And then as the market crashed, banks had to take out more derivatives to balance their books, to basically cook the books. And through 2008 through 2012, while we were in a massive recession, the biggest recession seen in this country since 1929, they continued upwards. And then, of course, with zero interest rate policy from the Federal Reserve and the printing of the printing of money through quantitative easing by the federal government, through the U.S. Treasury, through the Federal Reserve, that allowed them to unwind their derivatives a little bit. But against what's been happening since 2020, they printed shitloads of money, brought them down to one level, and they just continue trending upwards since then. We are looking at the exact same fucking thing that happened prior to 2008 happening now. See the uptrend, the peaks at the highs, and then back down. And now with inflation, we'll probably see this way fucking higher before it comes down during the recession. During the recession, we're already in a recession, let's put it that way. But during the actual harder parts of the recession, as it gets worse, we'll see the derivatives increase even more exponentially. So yeah, let's tweet that as well. Gorilla Grodd says the more people we educate on these markets, the better chance we have of making a change in the market. I've schooled a bunch of people on how stocks are bought and sold. Our movement is inevitable. We are inevitable. Knowledge is power. And the more that people open up their mind and open up their eyes and learn what the fuck is happening, the more angry they're going to get. And the less that people will continue to let them being walked all over. You guys have seen the meme of the people that are bent over and the two guys are playing a board game on their backs, right? Like a game of Risk, for example, and the two government, the two presidents or the prime ministers, the communist fascists that rig elections are playing the board game, and the guys that are sitting there bent over with the game on their back say, if we just stand over, the game's over. If we just stand up, the game is over. That's exactly what's going on. When retail investors stand up, the game's fucking over, guys. It's over. People just need to learn and actually take the time to do something about it. I'm not saying you have to fucking quit your job and go fucking do something about it. But do something about it. We are doing something about it through the creation of a company like Lit Exchange. You can do something about it by supporting our endeavors, or retweeting, or reposting, or liking, or whatever it is that you feel you can do. Where's that at? I want to quote tweet that. Here it is. Retail investors are fed up. It is time for fucking change, guys. Yeah, let's talk Darkpools. .1% of all bank derivative trades occur in Darkpools. Better yet, let me phrase that differently. Darkpools account for 65.1% of all bank derivative trades. There you go. And if you didn't know, I mean, I already explained it, right? I already explained it. It suppresses prices. It prevents proper price discovery. It allows them to make trades without having the stock price go up, without having the Forex go up, without having the equities go up, without letting the precious metals go up. And look at the precious metals. 6.9% are cleared through lit markets. The other 93% are cleared in dark pools. 93% of all precious metal bank trades occur in dark pools. See, if you're a silver investor, if you're a gold investor, this should really piss you off. Equity, 25.2% of trades. That's stocks, guys. Stocks. So that's 75.8% of stocks traded in dark pools by banks. But you notice the way that they purposely give you, instead of saying what this means, they kind of try to obfuscate it and really complicate it. And instead of telling you how much is traded in dark pools, they tell you how much is traded on centrally cleared derivatives as a percentage of total derivative contracts. Because the Congressional Budgetary Office and the Office of the Comptroller of the Currency are always telling you exactly what they're doing, but they believe that you're too stupid to know any better. Whoa, almost spilled my water. There you go. Now, if that's not a fucking red flag, I don't know what is, guys. I'm going to give that a fucking red flag for sure. Because that's insane. Oh, it's not popping up. Let's just give it a fucking siren then. Good enough. And it's doing research on things like this for my businesses. You know, I've told you guys I've been, I've been a business owner for over 20 years now in a variety of different things, in IT, in freight brokerage, and real estate brokerage, and soon to be stock brokerage and crypto brokerage. But I've been looking at these reports from the Congressional Budgetary Office, from the Office of the Comptroller of the Currency, from all of these assholes for decades now, because I want to know what's happening next year and last year and, in the next 5 years for the benefit of my company and my business, and to figure out how I'm going to prepare myself and my businesses, and how I'm going to lay out the plans for the future based on what they're telling us in their reports. And they're telling us everything in this fucking reports, the executive summaries, the about this, the details, they're all here. And they're very clear. Trading revenues are down. Derivatives are up. The total notional amount of derivatives is up $13 trillion in one fucking quarter. $13 trillion in one fucking quarter. Are you kidding me? How much is attributable to AMC and Gamestop? How much is attributable to fucking silver and gold? It's a ridiculous amount of fucking money for things like this. Real money. This is real fucking money. Silver, gold. This is toilet paper. Fiat currencies. Fucking toilet paper. This is asswipe. This is garbage right here. And this is what people are putting their faith in. When less than 1% of all people, less than 1% of people in this world hold an actual silver or gold coin, right? Why? Why? Talk to your financial advisor. Ask him if he thinks it's a good idea for you to hold some of your money in silver or gold or some other form of precious metals or some other equity that is beyond the fucking toilet paper that the U.S. government is hoping that you trust in. Come on, guys. I know you're smart, ladies and gentlemen. I know you are. You wouldn't be here if you weren't. Let's see if that shit will ever focus over here. Come on now. I love the design on this coin, too. This is the Highcroft Mining Corporation and AMC Entertainment commemorative coin. 0.999 fine silver, 1 ounce, 1 troy ounce. Developing Nevada's next world-class project, it says. Yeah. I just want transparency, says Steve. Abso-fucking-lutely, my friend. So do I. So do I. And $7 trillion in uninsured deposits is not it. $217 trillion in total notional derivatives is not it. This is not going to fucking cut it. The top 4 banks having $182 trillion in derivatives. 4 fucking banks hold 90% of the toxic garbage in financial markets. 4. Where can you buy physical silver or gold? Nat, there's a lot of physical silver and gold dealers probably in your neighborhood if you want to look at it in person. But you can also shop around online, and you can type in, silver for sale or silver dealers or gold dealers and stuff like that. And then you can find some as well. And I don't think I should make any recommendations, but I've used a few of them in the past of the online dealers, and a lot of the it helps to look up their reviews. Let's put it that way. But also look at their spot prices. See how much they're charging you in shipping. A lot of them have free shipping, and a lot of them have different premiums. So silver rounds are cheaper than silver coins. A silver round is basically something that's not like an actual coin, right? Like the American Eagle quarter, that's a coin that has a higher premium, so you pay more for that than you will for a silver round. But at the end of the day, for me, the value of it is in the silver. I'm not collecting them to collect fancy coins. A lot of people do that, and I respect that. But I'm doing that in order to collect actual silver in the form of physical silver. And it looks like we are now at 123 investors, up from 118 founding members a few minutes ago. We are at $260,000 raised to date. And I want to say thank you to all of you 123 founding investors for your trust, for your support, and for being part of change in financial markets. We will do everything within our power to implement real, positive, actionable, tangible change in these financial markets for you, for me, for our kids, our grandkids, and our great, great, great fucking grandkids. because enough is enough. Oops. I get really pissed off about this. Thank you, Tom. I appreciate you. But when I see shit like banks trading 75.8% of their stock derivatives in dark pools, it's infuriating. Francine's got some John Wick silver coins from APMEX. That's awesome. Those are really, really cool silver rounds. I don't think they're coins. I think they're rounds. But anyway, I'm just specifying for my own to correct myself. But yeah, the John Wick coins were so fucking cool, and I was thinking about getting one, but I don't think I didn't actually, but I probably should have. You know what? I've got a few other coins here. I've got quite what I consider to be a substantial amount of silver as well. I wish I would have got the John Wick coins, but aside from the Highcroft mining one, which is one of my favorites, I would say that this is my second favorite. And the reason being is because on the front side, let's see if we can get it to zoom here. You can see my camera and how shiny it is. Look at that. That's the OBS bot Meet camera there as well. 4K HD, 60 frames a second cam, but is obviously not very good at fucking autofocus. Since it will not autofocus. But yeah, this is one of my favorite coins here too. It's the Don't Tread on Me coin. You know what? Let me change my screen to webcam only and see if that makes it any better. And it's going to be full size, so you guys can see it on the entire screen if you want to. Let's see. Come on now, work with me here. So that's obviously a lot of you guys know that from the Gadsden flag. Right there, it says "Don't Tread on Me" with the snake, the coiled up snake on it. And I believe this is from Money Metals Exchange. Yes, it is. I see it at the bottom there. And the backside, in my opinion, is just as cool, if not cooler. And I find these to be just exceptionally gorgeous pieces. See here, Boston Tea Party, 1773, 1 troy ounce, 999 silver. And so for me, this is my favorite coin, second only to the Highcroft Mining Corporation and AMC coin. So I've got, I don't want to show off. I don't want to just, yeah, I'm not going to show off. I just wanted to show you my favorite coins. I'm not going to show you the rest of the. There's something important to be said about maintaining humility, and I do not like being a show-off. I just like to share what I think are really cool fucking coins. This is another one. This is a half an ounce from Money Metals Exchange, which I really like a lot as well. Oh, sorry, that's a 1/4 troy ounce, just to be upfront with you guys. But it's taped in. I don't want to open it out. It's a limited edition coin as well, so it comes in this little plastic case from Money Metals. I don't want to fucking dog hair on there. Get off there. I don't want to open it up. Black Widow, cheers, my friend. It would be a pleasure to work with you and to be a partner with you. And we look forward to doing more events in the future in which we ask founding members to join us for Zoom calls and various, Zoom meetings and stuff, so that we can ask you what you want, what you need, and what you think of our, plans for the future, of course. Yeah, I'll leave it at that, right? Because of course, I care to hear what our founding members have to say and their inputs. Joby, boss, you're the shit. Can't wait to watch this dumpster fire part. Spyput's gonna print. Francine likes those too. Cool. I'm glad. Yeah. Yeah, those John Wick coins are so cool. If you guys haven't seen them, you gotta fucking Google them. You know what? I'll pull it up for you. I'll pull it up for you guys. I won't make you do any extra work. John Wick silver round. And I did see them on APMEX. Are they still going? Ah, there it is. Oh, I think they're out of them. No, here it is. The APMEX has them. The 1 ounce silver continental coin. I'm just waiting for it to load, and I'll show it to you guys. It's got a Latin inscription with a lion on it. At least some of them do. There's a couple different ones, if I recall. There's like 3 different ones. There's an Osaka Continental one. Yeah, I'll pull that up here. But here's one of them. So you can see here on the backs, it says Ex Unite Viris. And my Latin is pretty rusty. But it's something to the tune of like, we are united. But it is a really cool coin. But as you can see here, it's fairly expensive when you consider the premium. And it's cool as a collector's item. But I personally wouldn't go buying a ton of these because there's a lot of others. Honestly, APMEX is nice, but I believe it to be overpriced a lot of times, personally. I've seen many other brokerages. I've bought from, personally, I bought from Money Metals. I've bought from buygoldandsilvercoins.com, BGASC. And I've compared them with APMEX, and I've found that 99% of the time they're cheaper than APMEX. But again, when you want something specialized like this John Wick coin, you know, this is the place to get it because a lot of times they have exclusive deals. Let's see. Bilbo, can I use silver to buy into Lit Exchange? Unfortunately not, my friend. Unfortunately, you can use a credit card, debit card, a bank account, ACH transfer, etc., but not silver at the moment. If I had my way, yeah, I'd say why not? Because silver is real money. But again, this is being done through a FINRA-approved funding portal called Silicon Prairie. And Silicon Prairie, as a broker-dealer, a funding portal approved by FINRA, they have to follow very strict regulations, which I don't have any say in what they accept. I did have the opportunity to accept credit card, debit card, ACH, and stuff like that. And so I did. The only one that I'm not accepting, that Silicon Prairie is not accepting on our behalf, are checks. For obvious reasons. It's too hard to manage a bunch of paper checks because they would be mailed to Silicon Prairie. Then they would have to mail them they would have to cash them, and it could just be a huge mess. I don't want checks to be an issue getting lost in the mail. ACH or credit card, debit card is the way to go. Larea Tidentata asks, hey boss, does the cumulative perks offered for the Founders Program keep going even though the $250,000 goal has been surpassed? If I recall, anybody who gets in prior to the 250K mark will be able to basically early bird bonus for all tiers. Early bird bonus means any investment funded during the first 250K total offering in Lit Exchange receives special status within Lit Tanks. Can I talk about the terms legally? Yes, I can. I can talk about the terms legally. Priority access to all programs, products, and services before launch or being made available to the general public, including beta. Special offers and deals will be made exclusively to early bird investors. But yes, I wanted to see if the cumulative investment portion was in the early bird bonus, but it is not. So early bird bonuses, so everybody who got in up until the 250K mark will get all of these perks depending on their level, right? You get more perks as you go higher in the offering. But the actual cumulative subscription is for the entirety of the raise. So all the way up until we reach our $5 million mark, $500,000 is our minimum goal. $5 million is our actual target goal that we are trying to meet over the period of 1 year, maximum period of 1 year from when we launched the raise, which was on Monday. So as you guys know, it's only been a couple days. We're blessed to be here with you all and to have so far 123 founding investors. So you can continue up until the raise is closed, invest again. So if in a week or two or whatever you get paid, or you get your tax return or whatever, you sell your house or your car and you got a few extra bucks laying around, you say, hey, I want to put another 500 or another 1,000 in, or I'm at the $2,000 level and I really like the perks here at the $5,000 level. Then, if you get, $3,000 from like a tax return or whatever, just period, like from working, then you can go ahead and invest another 1,000 here, 500 there, 1,000 there to get to the $5,000 level. Then you would get these things in the offering. And so, yeah, I can't talk about the terms in the offering. Now, you keep in mind, guys, one of the reasons why this is difficult is because the guidance on communication prior and during to a regulation CF offering is extremely complicated. And so I've had to ask a lot of questions to our attorneys, to the funding portal, to everybody who is, honestly, I've asked AI, I have Googled shit. I have been looking for fucking months and months and months, if actually years at this point, to try to figure it all out, to make sure that we're doing everything by the book. So if you notice that, a tweet of mine was deleted, it was because one of my tweets had a link to our website at litexchange.com, and it shouldn't have, because a link to the offering page, like the one you're seeing here on your screen, is not supposed to have a link to the company website. So that doesn't make any fucking sense to me, but that's the way that things are. And so I went in and I went ahead and I deleted it, and I made it right by creating a new one. So you can see here, there's a significant amount of things that you can and cannot say, communications that can be mentioned, communications that don't mention the term of the offering, communications that do, tombstone communications, factual information, terms of the offering, the amounts, the nature, the price, the closing date, and the intended use and progress made so far. This does allow for notices, written or oral, for me to do that. And the specific rules that are on the actual website are about 1,000 times more complicated, more difficult to read, and even longer. As you can see here, you can see how long this document is here if you're looking at my screen. If you're not looking, let's just put it, if it was printed out, it probably would be like 100 pages, because it is incredibly long, full of legal jargon and legal speak and double speak and contradictory information that tells you can do this and you can't do that, and then goes back and doubles back and says you can't do something it said you could do earlier, and you can do something you couldn't do earlier, even prior to that. So the sections, part 2227, regulation crowdfunding, general rules and regulations, which allows us to offer up to $5 million through this regulation CF raise, is extremely complicated and convoluted. But yeah, there are a lot of wonderful perks here, a lot of fantastic terms, and you'll find everything from the business plan to the SEC filings to the disclosures to the PPM documentation. And you can find our Regulation D, Regulation DA, and Regulation C filings on the SEC Edgar website as well, directly linked from there. So you guys can get more information about what we're doing, about the PPM and such. And I can even actually pull up the PPM for the Reg D. That would be considered a factual tombstone information, yeah, because it's a document. So let me pull that up. We're also doing a Reg D raise, which is separate from the Reg C raise. Now, we have not advertised the Reg D raise to anybody yet, because the minimum investment for the Reg D raise is $50,000. And I'm trying to be reasonable here with people, and I understand that that's a lot of money. So we're only going to offer that to people who come to us and say that they want to invest a significant chunk of change. There is no difference there, except they get a higher amount of equity. And naturally, right, if you spend $500 on a stock, for example, on the stock market, you're going to get less than if you spent $1,000 on the stock, and you're going to get less than if you spent $50,000 on a stock. And it's the same thing there. So we have not put this out there to anybody, really, the Reg D, but it is available if you want to invest $50,000 or more. You can invest up to $10 million in Lit Exchange through the Regulation D offering if you choose to do so. And anyway, here is our PPM. It is a $10 million offering via Reg D and $5 million offering via Reg C. And most retail investors, such as yourself, will probably use the Reg C, but you're more than welcome to hit me up if you want, and I'll give you the link to the Reg D as well. And you can see here this document is 122 pages of factual information about the company. It will also be linked on the Reg C page as well. And you guys are going to find it on the Reg C page. You'll find all the same information, okay? Except you'll find the Reg C one instead of the Reg D. Basically, it's the offering for the different number amount. But the business plan, the executive summary, the layout, the marketing plan, everything is in there for you guys. Yeah, this is a massively intense document that we have spent literally tens of thousands, not 10,000, tens of thousands of dollars in legal fees and attorney fees and other just fucking money out of the ass just to get these documentations created and revised over and over and over again in order to meet these regulations by the government. So there's a lot of things here that are factual, things that are related to hey, there's risks out there, and so on, and giving you guys more information about the securities being offered, the terms of the offering, the plans of distribution, the subscription funds, available information, and so on. So the details are there if you need them, guys. Let me go back, and if you click this little fire icon up here, our little Lit Exchange logo, it will take you here and you can see both of them in case you really want to for whatever reason. But yeah, that's where we're at. So far, now there's 124 founding investors. Cheers to you, my friend, for joining us. For whoever was the newest investor. $260,500 raised to date. Thank you very much, ladies and gentlemen. I appreciate your support and your trust. Wolfie says, give me a few weeks, boss, and I will invest AMC gains in a Lit Exchange. I am sure many diamond-handed apes feel the same, my friend. Yvonne Karn says, I am going to invest heavily in Lit Exchange when we MOAS. Cheers, Yvonne. Wish you the best. I hope that we MOAS before Lit Exchange Reg C or Reg D offerings are over. I really do. But obviously there's no guarantees in life, right? I don't know when MOAS is going to be, although I do suspect that the mother of all short squeezes is imminent. I don't know when it will be. Nobody knows when it will be, right? So, all right, folks. Let's check out to see what's... Yeah, but fucking 93% of all precious metal derivatives occur in dark pools. That's infuriating. T-Dog says, like Bigham said, it's time for a massive bank run. And Lamoney said, all I know is the real revolution won't be televised. I know for a fact if people woke up and actually cared to do something about this, there would be a lot of unalive bankers, politicians, and CEOs. I take back my like on that. I do not wish violence upon anybody. But the first half of what he said, I do agree with. I wholeheartedly agree with the first half of what that person said. Well, almost anybody, right? Almost anybody. But again, we don't condone violence on live streams, ever. And again, if you guys are just joining us, collateral hedge fund exposure, collateral against hedge fund exposure to short positions and toxic derivatives increased to 89%, guys. 89%. The collateral value to credit exposure ratio is higher than levels seen since the GFC, and hedgies need more margin than ever. Tom Martin says, I'm a juggernaut going on Captain Commander. Yes, my man. Thank you, Tom. Truly. That is so fucking awesome of you, man. Holy shit. Larea Tidentada says, boss, do you feel that Lit Exchange is a revolution or a complete reformation from the status quo of the markets? Honestly, Larea, okay. Can I say this? I think I can. Because this isn't related to the future projections. This is related to my thoughts. I do believe that what we're seeing right now is a revolution in financial markets. period. And I think that smart retail investors are doing things to make the markets better for all of us, like the way that Mahul and I and all of you 124 founding investors in Lit Exchange are doing in order to try to create something for us and our great-great-great-grandchildren that reforms the status quo and gets away from dark pools, gets away from payment for order flow, gets away from market manipulation. Because the more that we route to Lit, the more that we can work together and the more that we can trust each other, the better that we will actually be able to change these markets. Because for now, the big guys are pretending that they ignore us. And I know they're not fucking ignoring us, because companies like Tasty Trade and companies like IBKR have come out with advertisements via email and Twitter ads that are copying exactly what I fucking say on Twitter through Lit Exchange and through my accounts, Boss Blunts 1, on TikTok, Twitter, and here on YouTube and Rumble, The Butcher of Wall Street as well. I'm not talking similar. I'm talking identical. They're talking about transparency, yet they continue routing orders through dark pools. They're just using the words, and they're not actually implementing any of the changes. Therefore, it's of absolutely no threat to us. But when they're losing customers, lots of customers, then they will have no choice but to pivot in our direction. And by that point, it's already too late. Our moat is gigantic. In case you guys don't know what a moat is, think of what a moat is for a castle, right? A moat surrounds the castle all the way around, and it protects the castle. Our moat in our business is not something that I can publicly share with you guys, because it is a trade secret of a variety of things that sets us apart from all the other brokerages. So if all the other brokerages went and decided that they're not going to use payment for order flow from dark pools and Citadel and Virtue, they're still not going to be offering what Lit Exchange offers. Therefore, I'm not concerned even if they do try to do that, because we are in a completely different level. We're new, we're fresh, we don't have to abide by our corporate and hedge fund overlords, so we can do what the fuck we want. And what the fuck we want to do is what benefits retail investors the most. Period. Black Widow, I've played the worst golf over the last 2 days I ever played. I hope tomorrow will be fire. Oh, good luck, my friend. I equate it to more of a renaissance than a redo of the system. I do believe it's a renaissance. You know, you guys have heard me a lot of times with Alexander Hamilton. With Hamilton, I'm a huge fan of the musical and the movie Hamilton. We are a financial revolution. This is it. And I am like Alexander Hamilton. Until this changes, I will never be satisfied. Never. Thank you, everybody. I need a break, because I'm getting